Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market update. Today, the net asset of my account is 69,914.87. Today, Apple has closed down 0.36%, and SQQQ has closed up to 0.25% in the post market and down almost 3%. SPY closed up 0.79%. United Natural Gas closed down 5%. Today, the fluctuating on the gasoline and other natural fuels continue to decline as people's concern for the Middle East conflict began to worsen, and the Dow Jones Industrial Average closed up 0.59%. Nasdaq closed up 1.12%. S&P 500 closed up 0.76%. Today, the auto manufacturers and the software application closed with a gain with more than 2%. Today, let's take a look at the Fed's transaction. And actually, before that, let's take a look at one UBS's report on the financial forecast for this year. So, UBS strategists wrote that at this moment, the market is as if weak economic data is good. To some extent, the relationship reverses with more rate cuts and lower bond yields. JP Morgan strategists are also cautious about corporate earnings, especially given the weak Eurozone economy. JP Morgan strategist Ms. Slavik Matejka had warned that semiconductor stocks, already at record highs, will be hard this year amid a weak economy. In the report, she said, margins in cyclical sectors such as finance and consumer discretionary began to appear too high. As the positive impact during the pandemic is digested, earnings and margins could be affected. Earnings estimates for the MSCI Global All Countries Index have fallen in the past few weeks, with analysts gradually lowering their forecasts. And today, for the U.S. Treasury, with the basis of holding holdings may already exceed $1 trillion. Leveraged funds net short positions in the U.S. Treasury futures surged, and if the basis carry trade reverses, liquidity problems will spread faster in the financial system. On January 26, a former Elliott Asset Management portfolio manager and UBS bond strategist at Merrick Chapman posted hedge funds that basis trading, which is using the spread between the Treasury futures and spot market profit trading strategy, comeback. The current basis trading debt holding may be more than $1 trillion. The second is the Commodity Future Trading Commission, issuing a weekly trader commitment report, which details the size of future investors. The reporter believes that if the Fed starts to worry about the size of its basis trading at the end of May, the leveraged funds net short position in U.S. Treasury bond futures have increased significantly since then. For example, since May of 2023, the 2-year Treasury future short have increased 35%, 5-year up 26%, 10-year up 7%, and 30-year up a staggering 66%. This is particularly dangerous as people consume their expectation about the Fed while lowering its interest rates. However, with the Fed's more hawkish comments and stances on maintaining a stricter monetary policy, that this may be causing a higher margin to those investors. And that's why if the hedge fund basis trading reverses, the impact on the financial system will be systemic. With the Fed shrinking its balance sheet and the Treasury oversupplied, no investors in the current market has been able to smoothly absorb the large holdings of hedge funds. If the spot Treasury sells long, it will severely consume the liquidity reserves of market makers, mainly New York Fed primary dealers. Traders are at the core of the U.S. liquidity supply, simultaneously affecting multiple markets, including U.S. Treasuries, buybacks, institutional MBS mortgage-backed loans, securities, corporate bonds, local government bonds, etc. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.